Hello, welcome. This is Siwin Yi, and welcome to another episode. The National Association of Realtors article dated March 21st, 2023, which is Tuesday. If you see value, please smash the like button and also subscribe to my YouTube channel so you could get updated on a weekly basis on all the critical and relevant real estate information so you can make informed decisions on your situation. And furthermore, you should subscribe to my free real estate investing newsletter through my website below. Without further ado, this article just came out 21 March by the National Association of Realtors. So with that in mind, let's do a deep dive. And the headline is existing home sales surge 14.5% in February, ending a 12-month streak of declines. Clearly, we are seeing some very good trends in spite of the current elevated interest rate, which is around 6.7%, according to Mortgage News Daily. But I want to share with you briefly that the buyers and sellers for the past year, in my opinion, they have began to accept this is the new normal. 6 to 7% moving forward, they understand the expectation. So they are regrouping. The American buyers and sellers are resetting themselves to set the expectation moving forward. Some will decide to pull the trigger for those people that can afford to buy homes. However, we have some major issues with respect to supply of the inventory, which is very, very troubling trend in a good way and in a bad. We'll talk about it during this article. As you can see, I've highlighted the important aspects of this article. The key highlights are, once again, existing home sales has jumped 14.5% in February to a seasonally adjusted annual rate of 4.58 million, snapping a 12-month slide and representing the largest monthly percentage increase since July 2020, right at the onset of the pandemic. And the median existing home sales prices decreased 0.2% from the previous year to 363,000. So just to share with you, this is a lagging indicator, of course, and the data goes all the way only up to this past January. The next few months, we will receive another update from National Association Realtors. We are always around at least 45 days to 2 months behind on this type of articles as I've been promoting. Now, here's the most disturbing trend, which will, I believe, are presenting in any talk of a real estate crash. And here it is. Inventory of unsold existing homes was unchanged prior month at 980,000 at the end of February 2023, or the equivalent of 2.6 months supply at the current monthly sales pace. It's all about economics 101. If the demand exceeds supply, we're going to have a healthy market, pent-up demand, and it'll be a robust housing market moving forward if these trends continue. 2.6 months supply, a healthy balanced market is around 5 to 6 months supply of the inventory. We are only at 2.6, which is reaching at a historical low. Actually, in 2021, around 2 years ago, at the height of the pandemic, was a boom. The monthly supply is around 1 month of supply and historical low interest rate around 3%. That's still the massive rising prices and the real estate boom that occurred 2 years ago. So we're never going to get back to the low mortgage rate ever in our lifetime, I believe. But we are, at the same time, we're trending towards similar historic low supply of the inventory. And this 2.6 month supply could be lower unless the mortgage rate or unless the Federal Reserve and what have you decrease their interest rate from current 2.7% to lower than that. All right. So if it's lower than that, who knows? If they reduce it, this year or next year to closer to 6% or even below 6%, we may have a buying frenzy. Just bear in mind, changing mortgage rates, home buyers are taking advantage of any rate declines. So people just are very motivated, especially during spring housing market. We typically have a lot of activities on historical basis, beginning of the year, and this year are no exception. Buyers are taking advantage of any rate declines, said NAR chief economist Lawrence Yun. Moreover, he said, we are seeing stronger sales gains in areas where home prices are decreasing and the local economies are adding jobs. I think he's implying that even areas of where home prices have been decreasing, mainly in the western region, where you talk about like California and Las Vegas, Boise and Phoenix and Austin, even those areas where we have seen the past 9 months of home declines, even at those markets, we are seeing stronger sales gains. People are tired of waiting on the sidelines. People that can afford to buy homes, they cannot wait any longer. But they are accepting 6 to 7% mortgage rates. They just got to do it. Furthermore, Lawrence Yung said inventory levels are still at historic lows. Therefore, I don't see a illicit crash unless something drastic happens. Lawrence Yun said, consequently, multiple offers are returning on a good number of properties. I have also seen that. I do national real estate market opportunities for my real estate investors, and I have spoken to my network partners in all those markets in Phoenix, Las Vegas, and California, and in Florida, and especially on the entry-level homes that are below the medium price ranges and of those specific markets. My local realtors, my friends in those markets are telling me a home is priced well and they are very well upgraded in a good neighborhood, and they're getting bidding wars and multiple offers, not the crazy offers we have seen like back in 2021, but they're getting typically lower price entry-level homes in a good location in those submarkets of getting 5 to 10 offers per house, and they are getting around 5 to 10% bids over list. Yes, we are seeing some little bit of a bidding war out there. So that's what people are, like I said, are very, very motivated. Of all those people that have purchased recently, all cash sales accounted for 28% of all, more than a quarter of all home sales are done with cash. Those people, they do not care about the mortgage rate. They will pretty much bypass the mortgage rate. They want that house. They have the money to pay for it. They can stay in the house for a long time, 7 to 10 years or beyond. They feel good about the long-term prospect of achieving the American dream. Right? And individual, out of the 28% that purchased all cash, individual investors or second home buyers who made up many of the cash sales purchased 18% of the homes in February last month, up 16% in January, but down 19% from February of 2022. Distressed homes, foreclosure and short sales represented 2% of all this. Basically, the foreclosures out there are pretty much not relevant. There's virtually nothing out there where you don't even think about doing that. So let me see what else as we coming down to the end of this presentation. Owning a home provides a path of long-term financial security and is a vehicle by which to transfer wealth to future generations, said NAR National Association Realtor President Kenny Porcel. All right, that is the American dream. Regional breakdown. Northeast has improved their sales additional 4% from January. And their median price in the Northeast, median price of a home in the Northeast was $366,000, down 4.5% from the previous year. In the Midwest, existing homes sales grew 13.5%, even more from last year. And the median price of a home in the Midwest was $261,200, which is up 5% from February of 2022. Just so you know, real estate is very hyper local. There's no such thing as national real estate. So Midwest is doing well. A lot of the houses in those locations have appreciated over time. A lot of you don't know that, do you? So anyway, just so you know, it's not all doom and gloom out there. It's all about the local specific markets where we're located. So in the South, the home sales, existing home sales, I'm not talking about the new construction, right? It's not that category. Regular sales from existing homeowners in the South has rebounded to a whopping 15.9% up as a decrease in 21% of last year, but still a very elevated good trend. And the median price in the South was $342,000, an increase of 2.7% from a year ago. In the West, the existing home sales rocketed to almost 20% in February from the prior month, and to an annual rate of 860,000, which is still down from 28% from the past year. The median price in the Western region of the U.S. is $541,000, $500,000, down 5.6% from February of 2022. All right, so that's what's going on with that. And I want to share with you a couple more things here. I want to share you my own slideshow, which kind of validate what not only National Association of Realtors have shared with you guys, but I'm going to take a picture view of what's going on in the past 2 years and moving forward. And according to my slideshow right here, America is still short more than 5 million homes, and builders cannot make up the difference. We are short almost 2 million homes per year, and we need about 15 million homes to be built over the next 10. This article, this slide basically said that they have a shortage of homes for this coming decade, not just short term, not just this year, not just next year, because there's a lot of reasons why, and the household formation has increased greater than the supply of homes available from the resale homes out there, as well as from the new construction from the builders. Just so you know the big picture. And currently Alto's research, they have tracked the inventory levels over the past 2 years. As you can see, at July 2015, 8 years ago, there were quite a few homes available, around 1.5 million single family homes. As you can see, the trends of less and less supply of inventory throughout the past 8 years. The lowest, of course, was 2021, right here during the historical housing boom 2 years ago, 2021. And then, even though we have seen some increase in inventory as a result of the lowering of the demand because of the mortgage rate, the past 9 months has elevated quite significantly to over 7% as of last October, and then down to 5.9% in the early part of February, now back up to 7% a week ago, now down 6.7%. So given that, as you can see, the current inventory is only around less than 500,000. We have seen some housing supply continue to be very low, and so there's not a lot of homes out there people can choose from. And one of the main reasons is the locked in effect. Summers are locked in. It's all about supply and demand, and demand is still pretty elevated, and supply is very hard to catch up. The U.S. home equity have surged to a very significant amount, as you can see, and 9 out of 10 mortgages have an interest rate below 5%, and more than 40% of all the homeowners don't even have a mortgage. So people are not going to get rid of their 3% historical low 30-year fixed rate mortgage to move up to buy a higher price home, potentially at 6.7%. If they would do that, they could have to more than double their mortgage. That's no motivation for these people doing anything like that. So homeowners are not selling. There's not enough homes to sell anywhere in the country. Look at it. Look at the breakdown of people. 65% people of mortgages have 4% or less, and they're not going to sell. They can live there forever unless the mortgage rate decreases from its current 6.7%. Like you can see, look at the breakdown. There were almost 5 million mortgages have a 30-year fixed rate of 0.5%. Well, those people are not selling at all. They're going to be aging in place, if you know what I mean. Then people are at the 2.5 to 3% mortgage rate category. Consists of like 13 million people out there. Clearly, they have no more than they're going to stay at the house forever. They're going to enjoy their low payment fixed rate for the remainder of their natural lives, while inflation and cost of living and what have you continue to increase. But their mortgage will stay put. And 11 million people have mortgage rate of less than 3.5%. 9.5 million mortgages have mortgage rate of less than 4%. And 6 million people have mortgage rate of less than 45%. And the only way any group, any category of these people are willing to give up their mortgages, the mortgage rate currently have to be lower than 6%, maybe, right? 5.5 or even 5% before some of these current homeowners are willing to move up to sell their homes. Does that make sense? So this is a epic problem. It's not going to change. The supply inventory does not go up and down that quickly, but the demand can go up in a very quickly based on the interest rate fluctuations. Hopefully you've received a lot of value from this presentation. If you have, please smash the like button and subscribe to my YouTube channel. And also below, you can visit my website below, drop your email into the form to subscribe to my weekly Turkey real estate investor newsletter. Thank you so much. This is Siwing Yi. Have a nice day. I'll see you on the next video. Bye-bye.